here's a paradox that's baffling economists and investors alike. Why do stock prices keep climbing even as the economic landscape shows troubling cracks? Jobless claims are climbing to multi-year peaks, worker optimism has tanked to its lowest level since the pandemic, and prices for everyday goods are creeping upward faster than expected. Meanwhile, the U.S. government's borrowing binge is accelerating, and households are feeling more cautious about their finances. Yet, Wall Street's top indices are hitting record highs. What's the missing piece of this puzzle? And how can markets thrive while Main Street struggles? Let's break it down. First, the numbers. Unemployment rates have crept upward, with surveys revealing a sharp drop in workers' confidence about job security. Inflation, once thought to be under control, is surging again, fueled by stubborn supply chain issues and geopolitical tensions. The federal deficit is widening as spending outpaces revenue, and consumer confidence reports show households tightening their belts. Yet, despite these red flags, stocks continue their upward march. But here's where it gets controversial. Many analysts argue that the stock market isn't a mirror of the real economy. It's a forward-looking gamble. Investors are betting that corporate profits will remain resilient, even if economic growth slows. For example, tech giants are reporting sky-high earnings from AI-driven innovation, while big banks benefit from higher interest rates. This creates a disconnect. The market is pricing in future optimism, even as today's paycheck struggles mount. And this is the part most people miss. Central banks are playing a pivotal role. The Federal Reserve's recent hints about rate cuts have sent a ripple of relief through Wall Street, even as inflation remains sticky. Traders are interpreting these signals as a green light to buy now, assuming rates will eventually fall. But is this optimism justified, or are investors ignoring the risks of a potential recession? The real kicker? Key economic questions remain unanswered. Will Trump's proposed tariffs ignite a trade war that backfires on American businesses? How will the Fed balance inflation control with the risk of stifling growth? These uncertainties create a volatile backdrop where speculation often outpaces reality. So what's your take? Is the stock market's rise a sign of misplaced confidence or a well-calculated bet on future recovery? Could the current rally mask deeper vulnerabilities that will burst like a bubble? Share your thoughts in the comments. Let's debate whether this is a smart play or a dangerous gamble.